Hello and welcome back. I wanted to jump straight back in with an update since yesterday's video as we continue to challenge and break that key $65,000 level to the upside, because the situation has changed somewhat given that we are now attacking that level fairly aggressively. Let's jump in first of all and take a look at the chart. So what I want to draw your attention to here is first of all on the longer time frame. Now I've been talking about 65K as a key level over the last couple of days, but let me just explain to you one more time why that is so important. So let's mark in our high here from the 11th of March. From there we came down to a low on Monday the 29th of April, lower high, lower low, lower high, lower low, right? Downtrend, lower high, lower low, lower high, lower low. Then we come up here, didn't make a new high, so we can call this again a lower high. And then from there, we haven't yet confirmed the continuation of that trend, of that downtrend, or the reversion of that trend, right? Because we haven't made a lower low again, and we haven't yet made a lower high, okay? Because the next low hasn't been put in. What we can also look at, if we zoom in a little bit, I'm on the weekly chart here, but from the low that we put in on the 5th of August, we've then gone on to make a high, a higher low, and just now at that 65K level, we are trying to put in a higher high. And so if we can accept prices above this 65K level, we've essentially confirmed an uptrend at least as of the 5th of August. And that puts us in a position to come on and challenge this next high at $70,000 and break out of this sort of macro downtrend that we've been in since the all-time high. That is why $65,000 is such a key important level. Now let me zoom the chart in here to the hourly, and in doing that we can see the character with which the market is challenging these key highs at $65,000. We first broke through and we actually extended all the way to break the next high up here at 65,006. We then rejected briefly, and just now we're kind of putting in a little bit of consolidation above the former highs, a little bit lower down than that $65,000 level at like 64,800, which we've kind of flipped, at least in a micro sense, to resistance turn support with this little consolidation cluster here. Why am I saying all this? Well, this level remains very, very important, and to see whether or not we're going to break this kind of maps out, I think, what's going to happen over the next couple of days. Now, again, I want to jump back in and look at the metrics that we were analyzing in the last video, because this narrative is still kind of playing out. First of all, the fear and greed index now sitting in greed at 61. So we're up on yesterday. And again, it's the same thing that I was talking about before, right? Relatively small move to the upside, albeit to a very, very key level, but it's not like we smashed through that level, right? It's not like that level was obliterated to the upside, loads of short positions getting liquidated, etc., etc. We really just tested it, broke through, and now are kind of trying, the bulls are trying to maintain that level. But the fact that they're really having to try, and there's not a lot of momentum in that move just yet, that combined with greed in the market, right? Increased fear and greed index all the way up to 61, to me means that the same effect that I was talking about yesterday is happening, where we get really, really excited right now about pretty small and pretty unconvincing moves. Further to that, I want to look at the order book again. So here, looking at Bookmap, this is analyzing the market, BTC USDT at Binance, so the futures market that is. But in any case, what you can see by this chart is that this is kind of a wedge shape, right? It's thinner at this end and it's thicker at this end. And what that means is there is a lot more sell side liquidity at prices above where we are right now than there is buy side liquidity at prices below where we are right now. And if you zoom in on the micro scale, that effect is exaggerated, right? The peak of sell side liquidity is living up here just above $66,000, right? Somewhere around 66.5. So if we look at where that lies back on our chart, in terms of pricing, that's up here, which is before our next level of resistance prior to the big 70K level. Reminder, that 70K level is what would technically take us out of the downtrend that we've been in since the all-time high. And of course, as we always say, prices don't move because of lines drawn on a chart, not by me, not by John Bollinger, not by anyone. Prices move because of supply and demand. And the best measure that we have of supply and demand is the order book, because the order book is where market participants advertise their intentions to either buy or sell the underlying asset. Now, of course, these are limit orders. They're only going to get filled if the market price reaches the levels where they're set, and they can be put in as a spoof and they could be removed, etc., etc. But nevertheless, this is the best indicator that we have of the intentions of market participants. And what that indicator is saying right now is there's a lot of people waiting to sell, take profits, get out, etc., etc., at prices pretty close to where we are right now, all the way from $65,000 up to about $66,500. What it's also saying is there's not a lot of market participants looking to buy if the prices slip down just a little bit from here. Sure, we've got some liquidity down here at about 64,000, but that's really the only spike that we see. And the order book is, generally speaking, much thinner to the downside, meaning any move down from here in conjunction with really wildly fluctuating fear and greed right now, i.e. market sentiment, means that the move to the downside could definitely become more exaggerated than any move to the upside. Now, if you need another reason why this $65,000 level is so important, this is the level at which 90% of BTC holders are going to be in profit, right? This was reported by Into the Block. Bitcoin's steadily climbing, and with it, the number of holders in profit naturally. If Bitcoin breaks 65K, over 90% of holders will be in profit. The last time we saw that was back in July when Bitcoin ultimately failed to reach a new all-time high. Now, what happens when market holders are scared and they're in profit? Well, they tend to sell, right? Or at least they sell if they're sensible. So that's just another reason why I could see that there is an incentive here for holders, particularly big whale holders, to get out of the market. And honestly, that's kind of reflected in the order book. Of course, this could all be totally wrong, right? If momentum comes in, if we get a convincing break of this 65K level, we get a convincing break of the next level, which is $65,600, and on from there up to 66.7. That's the point where we could start liquidating some shorts, maybe even soak up all of this liquidity that we're seeing in the book and see a continued move to the upside. But calling it as I see it right now, I still remain concerned about the momentum that we can carry through this move, particularly moving into the weekend where there's generally lower liquidity. In any case, as always, thank you so much for watching. None of that should be considered financial advice. That's just my opinion. I'm just looking at the markets for entertainment purposes. Thank you so much for watching. Plenty more to come. Catch you in the next one. Cheers. Bye-bye.